All right. Crypto has been choppy. Crypto has been going sideways. What is happening with the price action? Everybody is expecting alt season. Everybody's expecting the markets to just moon to the sky. But this choppiness, Bitcoin pulling back after hitting a new all-time high above 123,000 is now tanking. Ethereum hit a brand new all-time high, then dumped. What is going on? I thought the market was going to go higher. I thought Ethereum was going to hit over 5K because that dude on Twitter with a cartoon character as an avatar told me that it was going to happen. And it's not happening. So what is going on? What should I do? Should I sell? Should I buy more? Should I just leave the market? Should I just go into a coma and wake up in 10 years? I'm here to answer those questions and to make sure that you don't capitulate at the lows and you don't buy tops anymore. This is how you're going to structure your portfolio. That way you're not left holding the bag. All right, let's get started here. We're going to talk about portfolio structure. And if you're new to my channel, this is the financial trader's mindset, where I talk about how to think in the markets, how to position yourself for the best success, right? We're going to talk about crypto only. We're not talking about your stocks, not talking about your real estate. We're not talking about all that, right? Simply portfolio structure. So when you see all the percentages and how to structure and how to think about your portfolio, it only applies to crypto here, right? With that out of the way, I want to say it's going to be very simple. I like to keep things simple, not complicated, not something where you have to like freaking hire your quant to do the work for you and to figure it out. No, you don't need all that. You don't need to do any of that, because as a retail trader, we are at a disadvantage to hedge funds and institutions. So you want to keep it as simple as possible and leverage time and positioning, or better yet, lack of leverage or minimizing leverage to make sure you have the best performance. That's what I'm here to teach you today. Or you're a conservative Bitcoin, or you're a conservative crypto enthusiast, right? You want to allocate some positioning to crypto, but you don't want a lot of volatility. And you want to make sure that you're in the right assets so you can hold long-term. Draw a pie here. That's my pie. I would say if you want to keep risk at a minimum, most of your portfolio, if not all of it, should just be in Bitcoin. Now, you may think, shouldn't I diversify in crypto? No, Bitcoin is the king. And if the altcoins are going to move, that all depends if Bitcoin is holding up its value and if it's actually in a bull run, right? If Bitcoin is not in a bull run, your altcoins are going to perform like shit. So keep it simple right here. This is all Bitcoin. And then here, alts. Very simple, right? Call it 90%. 90% in Bitcoin. You want to just hold, at least if you're very conservative, you don't want any risk. That's simply because you lower the volatility in your portfolio by being in Bitcoin. You know what to expect. You're not susceptible to the emotional fear that you will endure during a bear market. Bitcoin is the place to be because you will preserve your capital throughout market cycles. All right? Keep it that simple. So what if you're super degen? What do you do then? Let's go back to the pie chart, right? You're super degen. You're like, you know what? I could handle the volatility. I don't care. I could have my portfolio go to zero. Even then, 50%, I'd say 25% of your portfolio in Bitcoin. At the minimum, I would even argue to say 30%, simply because as Bitcoin makes its gains, right? You can have your shitcoin here at a 50% allocation, which I know some of you are probably at 100% allocation, but I'm not even going to go into that. And then 25% like stables, right? However risky you are, right? But the point here is to have your allocation in Bitcoin. Have some allocation. Now look back at the past few years. Since January 2023, that's when Bitcoin started its bull run. That's when it started ripping and roaring from the lows. And it's done nearly a 10x from the lows. If you had 25% of your portfolio in Bitcoin and all your shitcoins went to shit, at least Bitcoin made a 10x. Now we're going to just round it up here. It didn't do an actual 10x, probably an 7 or 8x. But what I'm trying to show here is that your portfolio would have went up 250% in value because you have 25% in Bitcoin. Your portfolio is up 250%, not a double, 3.5x. This is how a lot of people's portfolios are performing. 100% alts. That is freaking death, man. I understand why people sit in altcoins, in 100% altcoins. I totally get it. You see online, you see your favorite influencer, they're making a shit ton of money. They're driving Lambos. They have these mansions and they say, you know what? I was just trading some altcoins and I made 100,000x, 10,000x, 50,000x, 100,000x. So you look at this, when you watch this on social media, You watch this on YouTube, you watch this on Instagram, and you see all this and you're like, oh shit, I can do that. All I need is $1,000 and I could 100x it. The problem is that all you're seeing are I'm not talking about specific influencer. I'm talking about the space as a whole. People only like to talk about their wins, the highlights. People shy away. Most people, I'm not saying everybody, but most people do not talk about their losses. They don't talk about the devastating losses that they've had. And if they do, it's usually after huge wins, right? They're like, oh yeah, before this huge win, I had this huge loss, but I persevered and came back and all that bullshit. You know what I'm talking about. But for every one of those winners that you see flaunting gains, there is a graveyard of investors that have portfolios that look just like this, 100% alts that are down in the dumps. And it's sad. It truly is sad because you're brought to believe that it is possible to achieve these crazy gains, where in reality, you're playing the lottery here. And you have to think, how is that influencer making so much in gains? Trading, especially shitcoins, is a zero-sum game. It's got to come from somewhere. And who is it coming from? It's coming from you and everybody else jumping into whatever shitcoin they're making money on. They're extracting your liquidity from your pockets. And they're selling you a story, telling you how big this coin is going to be or whatever. And on the other side of their mouth, they're just fucking selling. They're selling into your offers, right into your buy orders. They're selling, they're dumping. I'm making this video super simple to showcase the importance of having some allocation to Bitcoin, especially during a bull run. Okay, so we got that out of the way. Have some exposure to Bitcoin. Okay, how do you structure the rest of your portfolio? So you have your Bitcoin, then you want to think about having a reserve of stable coins. You see how I don't go into buying your favorite altcoin or your favorite shit coins right after Bitcoin. You have to have your stable coins, and you have to have a floor that you set where you're like, I don't dip below this unless it's an absolute emergency. I like to keep it about 5 to 10% of my portfolio in stable coins, simply because you may be leveraged up and you may get caught in a downturn. One of those downturns where we all saw Ethereum, the dip kept dipping. It went from 4K down to 1,300, and I was leveraging up. And I had to dip a little bit into my stable coins just because I don't want to get liquidated. So it's very important to have some stable coins because it could come in clutch during an emergency, and you don't touch that at all. That is your floor, whether it's 5 or 10%. I would say 10% at least of your portfolio, always in stable coin. It can go above that when you're taking profit and stuff, right? But when you're allocating risk to different assets, then you do not go below that 10% threshold. It's just to keep you safe, especially if you use a leverage a lot. Not only that, but it can also come in clutch for opportunities. You could dip below 10%. If you see a glaring opportunity, you're like, you know what? It's worth for me to maybe bring that allocation down to 5% and use some of those stable coins to take advantage of an opportunity. But I would say steer away from that because it does come with discretion. And most people, they'll just look at this and say, oh, you know what? Okay, yeah, I could go jump in my favorite shitcoin and get rugged. So I would say steer clear from that unless you're very good at your discretionary abilities of picking an actual opportunity. Right? Not just your favorite influencer shilling some shitcoin. All right. So 5 to 10% in stablecoin. Okay. So what do you do with the rest of your portfolio? Keep it real simple. You can do ever the fuck you want. You're like, wait, that doesn't make sense. Well, how do I know what I want? That's the thing. Nobody, me or any other YouTuber or any influencer or even someone with a crazy amount of following that made a shit ton of money. There's nobody on earth that can give you conviction in choosing and investing in the asset that you want, because there's no wrong asset to invest in, right? We're just talking about quality assets. Nobody can convince you and give you the conviction you need. Conviction is like a tailored suit. Only you can tailor your own suit to you, right? You can't take off that suit and give it to someone else. It won't fit them. They won't look good on them. It'll be too short, too long. They're not going to believe that suit is for them. So why would you wear somebody else's suit that's tailored for them? Same with investing. You're not going to have conviction and you're not going to believe in the asset, right? Say they shill something, you invest in that altcoin, but they are fully convicted and 100% love the asset. They want to invest in it and they're willing to hold their drawdowns. They're willing to buy the dip. So you follow them into the trade. It goes into a drawdown. Now you're down money, 20, 30, 50%. That is not uncommon in crypto. That is not uncommon. So what are you going to do when you're 50% down in an asset that you just followed someone into? You have no conviction in it. You don't even know what it does. It's just dropping in value. 9 times out of 10, you will capitulate. You will dump your bags. And it will be usually at the bottom, only to see it go back up. And then you're like, oh my God, I should have held, right? And then that's how you get caught in that whipsaw of volatility. You FOMO in, capitulate. It's a bad time in investing. So you find assets, you do a little research. You don't have to do complete research. The more research you do on an asset, the more you can allocate funds to. If this is like a shitcoin trade and you only just looked at the website and you took 1 or 2 minutes to do your own research, then yeah, only throw a small position on it. But for those that you have high conviction in, you're like, okay, this is a good project. I really like it. I'm willing to lose this much. And the best thing to base your risk off of, especially in crypto, risk to zero, losing the entire lot. That way, you will not be shaken out of your bags. You're like, you know what? I'm just to zero. It's either zero or hero. And that's how you should play all altcoins. That's how I play them. Either they go to zero or I win. And it works out really well because they're in the dire and trying times of big drawdowns where the market just looks like it's not going to recover in that shit. But during the bull runs, a lot of them recover and some. And that's what you're looking for. Again, I can't stress this enough. This is probably one of the most important parts of the video is to have conviction in what you invest in. So I'm not going to tell you what to invest in. You invest in whatever the fuck you want, but make sure you have conviction in it. That is the secret to success. That is the secret to longevity in the markets. And the more you do it, the more you do your own research, the more you build your own conviction, the better you get. It's like the movie Inception. They have to go into the guy's brain, in his mind, and plant the idea. They can't just go up to him and say, hey, this is a good idea. You should do it. Because he's going to be like, that's your idea. But if they plant it in his mind, plant the seed, and then he thinks he came up with the idea, that is powerful. So again, conviction. I say this is the most important part here. You cannot win and you will not last long-term if you don't build your own conviction in your own investments, because you will easily get shaken out, especially in crypto. But that goes across the board, stocks, real estate, what have you. You have to have conviction. It's very important. So just to recap, have your stablecoin stash, right? That is your protection. It doesn't have to be 5 to 10%. It can be higher. If you want less volatility in your portfolio, if you're like, I don't want to go below 20% stablecoin, that's fine too. 30%, okay, that's fine too. Might be a little too much. At least 5 to 10% of your portfolio should be in stablecoins. All right. So emergency use, that is your reserve to protect you. Next, Bitcoin. Remember what I said? 25 to 90%, depending on how risk averse you are. If you're super conservative, you want to be at this number, 90%, or not at 90, but around that number, right? 60, 70%, 80%, 90% of your portfolio in Bitcoin. Depending, if you want the least amount of risk as possible, you want to put most of it, you want to have a high percentage in Bitcoin. If you're super degen and you're like, you know what, I want to use most of my portfolio for altcoins, then okay, at least 25% for the degen. And then the conservative guy just chilling here. Just chilling. He's like, yep, I just want some cool little gains. And then here's the fucking degen here, fucking all distraught. He's jumping out of an airplane, coked out of his mind, smoking a cigar. He's full on degen, man. 25% still in Bitcoin. Still very important. Then the rest, I don't know, man, whatever you want. Like I said, just have conviction in it. All right, guys. I think that summarizes the video. Hopefully that's helpful. If you have any questions, post them below. If you want to join my Discord, it's free to join. You can ask questions. It's primarily about the Discord's around concentrated liquidity, how I use concentrated liquidity to profit in these markets. But it's really important to set up your allocation and to think about your portfolio in this way. I can help you out with your concentrated liquidity needs, how to set up liquidity pools. If you have questions on your positions, how you should position. I even talk about how I position in the markets. I talk about my market analysis, what I'm thinking. So if you want, click the link to join in the description, and I'll see you guys there. Peace out.